So gold outperformed mining stocks last year. Why is that?
I think it's the continued fantasy with everything in the gold top line doesn't go to the bottom line, particularly for shareholders. So shareholders want to realize the top line of gold price in bottom line performance. And while our financial performance has improved, I think management risk embedded in our companies, things like political risk, development risk, operating exposure risk. So one of the things we've tried to do at Newmont is tie the top line to bottom line shareholder returns with our gold-linked dividends so that people can actually visualize their returns going up as gold price goes up.
Are we going to see a dividend increase this year to attract investors?
I'm not sure in the industry, but I can tell you ours is absolutely linked to gold price. So if the average gold price goes up in a quarter, our dividend goes up in $100 increments for gold price.
So as we see the U.S. recover, looking relatively strong now compared to Europe, as we see some of the economies that were so depressed recovering a bit, do you see the price of gold falling?
I don't. I actually think that there's so much embedded currency inflation that's occurred over the past several years. To get these economies back on track, I see continued demand growth in China. The Chinese economy this year, I believe, is going to grow at 8 to perhaps 10%. That's enough in the middle class to create this physical demand that keeps coming for gold. I think those two things in combination, inflation, physical investment demand for gold, is going to keep gold in a bull cycle.
Were central banks net buyers of gold in 2011 again as they were in 2010?
They were again, yes.
To a greater extent?
I think, yes, a greater extent, and we continue to see more investment by consumers, so not just the central banks, but consumers, not just jewelry, but investment.
How are you watching the consumers shift the way that they choose to invest in gold? Because that's a question we get a lot from the average person is, how do I get in on this?
Yeah, so there's several ways to get in. The ETF is obviously the easiest because it trades like a stock, you can buy it. But you can also buy gold coins, smaller gold bars, and in China they actually have a direct draft program so that you can take money out of your savings account and every payroll period buy a piece of gold.
It's fascinating to watch, and you obviously are very bullish on it. You called for $2,000 gold in the next 5 years. Is that still your call? Are you raising it?
I think that's still a safe call. Probably safe, probably conservative, because I do think
that's conservative.
It is. It is. If you think about $800 gold in 1980, which was the historic high for gold, escalated to today, it's only $2,300. So we're not even inflation.
And you have to adjust for inflation.
Yeah,
we're not even
there in
adjusted.
true dollar basis.
Any places, and we always talk about this, that risk reward for exploration in places that are politically unstable. Any places that you're looking at where you say the exploration possibilities are great there, however, it is too risky at this point in time?
Yeah, I think there are two really big countries where if major mining companies could go, I think we could help explore, hopefully develop, and hopefully produce. And those are Russia and China. There's limited discovery in both. China, the world's largest gold producer, the world's largest gold consumer. But right now, not a lot of exploration by big companies, smaller Chinese companies.
Are you totally outside of China?
We are. And it's mostly because we don't have a partnership relationship with the Chinese, with Chinese companies, so it's not the Chinese. And we'd really like to try to get one over time, but that's a good way to reduce our political risk.
So the best way to do that would be through acquisition, right? You're not going to grow organically there.
No, but it's probably through an exploration joint venture, and really not through acquisition, but negotiation. Find a partner who has the same goals that we do, invest right alongside with them. We can bring technology and hopefully help advance the industry.
Newmont's going to spend somewhere, I read, between $3 billion to $3.3 billion this year. Where are you going to put that money to work? Does any of it go to work in the United States, or is that not really where the potential is?
Actually, we have probably of our capital budget this year, probably $500+ million is going to go to work in Nevada. So we do quite a bit of work in Nevada. We have a big project in Peru. We have projects in Ghana. And we also have a few projects in Indonesia and Australia, so kind of spread throughout the world.
Hiring, is it going to go along with that?
Yeah, we are hiring big time.
Big time.
We have 500 mining engineers in our company. Over the next 5 years, 300 of them are going to retire. We could hire every graduating mining engineer in the United States, and we couldn't replace them.
No matter what industry I talk to, whether it is banking, technology, and now mining, it is engineers that you guys need.
It is.
It's fascinating.
All the young people in the world go into mining. It's going to be a great business.